looking back to a larger recession, right, the Great Recession of 2008, 2009, while most equities plunged, almost more than 50% over that multi-year span, wine only had a single-digit dip. So, there's nothing that is 100% recession-proof, but wine has proven to be quite resilient in those times because, it's really just consumption that is the main factor that leads to wine prices going up and down. And usually during recessionary environments, alcohol consumption is slightly elevated than normal years as well.
My name is M. Norton. I'm a staff writer here at MoneyWise, and I'm joined today by Anthony Zhang, CEO and founder of Vinovest. Thanks for being with us. We really appreciate it.
Yeah, it's glad to be on here. So really appreciate your time today.
Yeah, of course. Just to jump right into it, do you want to tell us a little bit about Vinovest and sort of how it came to be?
Absolutely. So Vinovest is a platform that provides access to wine and spirits as an investment. I started this company about 3 years ago, but I had been always interested in collecting and investing in wine. So a few years prior to that, after I sold my first company, I remember myself just diving into the world of collectibles after reading an article, I believe in the Wall Street Journal, that was talking about how these sort of luxury assets such as wine and whiskey and art and watches were all very high performing. And in fact, they had beaten out the S&P 500 over the past few decades. So that really piqued my interest. And I was like, all right, I could be a wine collector. Let's see how this goes. I very quickly realized how difficult and expensive and inaccessible it was because there wasn't a lot of information out there on what to do if you wanted to start investing in wine. I was living in a condo in LA at the time and definitely did not have the space to store wine. And finally, there was just no other sort of online platform that'd be easy to even acquire or sell the wines when I wanted to sell them. So I had to go to auctions. An auction is a very sort of stressful environment, and plus they take 20% plus of your hammer price as well. So the economics just didn't really work out for me, and I was telling a few friends about it, and my now co-founder Brent and I, we decided to create a solution that was more tech driven. So to solve the problem of not knowing what to invest in, we created an algorithm that actually analyzes some of your investment preferences and turns that into wine recommendations. On the storage side, we were able to work with a few really top professional storage facilities all around the world and be able to have storage offsite so that any investor can get started in Vinovest without needing any sort of physical infrastructure. And then finally, on the buying and selling side, instead of going to auctions, we've developed really fantastic relationships with a lot of wine producers and merchants, as well as retail and customer sale channels to be able to both buy and sell the wine when the time is right, and for a fraction of the cost of an auction house. So we put all this solution together, called it Vinovest, and here we are.
I'm curious why wine specifically as an asset to build your investment platform on, as opposed to other options. And did you explore any of those other options?
Yeah, so I think it really started with personal interest. I'd always just been interested in wine, was really drawn to the history of it and obviously the taste of it as well. So when I was looking at a list of potential other alternative assets, right, I mentioned art or maybe vintage cars or watches and things like that. Wine just really drew me to it. It also is, a pretty developed market. People have been investing and collecting in wine for hundreds of years, and it seemed one that really combined sort of my personal interest with a really great business opportunity as well.
So how does Vinovest pick wines for different investors? More specifically, how do wine selections differ based on a client's risk tolerance?
Great question. So we use a combination of our human experts as well as our algorithm to make our decisions. And when you're looking at different preferences based on different investors, there are things like how much they're willing to invest, right? Some bottles are inherently just different prices than others. So if you're starting at, say, $5,000, you're kind of priced out of anything $5,000 and above. And when you're looking at your risk, we're looking at also how long you're willing to invest for. Wine in general is a pretty long-term asset class. The main things that drive the price are going to be the aging of the wine, which takes time, as well as the supply and demand, which as years go by, the remaining supply of a particular bottle that was produced in a particular year go down as well. So for folks who are fairly conservative, we would take a look at more established regions, ones that have been growing and producing very, very quality wine for a long time. So Bordeaux, Napa Valley, other parts of France. If someone is a little bit more on the aggressive side in terms of their risk appetite, they'd be getting more up and coming regions. They'd also be getting, in terms of a portfolio concentration, larger position sizes. So it would be a little bit more of a focused approach for more aggressive investors.
I'm also curious to know what types of wines tend to outperform.
Yeah, so we're looking at really just the main regions in the old world. We're looking at outperforming wines. So in France, we've got Bordeaux, Burgundy, Champagne, and Rhone as the key regions. Italy, mainly Tuscany and Piedmont. And then in the New World, it's mostly in California. So there are a few Napa Valley wineries that are really up and coming. And then also parts of South America, like Chile and Argentina. So those are kind of the main regions that we look at. There are going to be select producers in countries like Australia, Germany, Spain, Austria even, that we will seek out. But mostly if you're talking about the well-known regions, it's going to be the established ones that we're all familiar with.
So speaking of, I guess, the performance of wine as an asset, many investors are worried about the Fed's aggressive rate hikes. So I'm curious, how has wine as an asset class performed in different interest rate environments?
Yeah, so right now we're in a higher interest rate environment. Last year, our average investor was able to return about 6% in all of 2022. So not only were we able to outperform the stock market and other broader markets like gold and other commodities, but we're also able to outpace the Fed rate. Right, that is kind of the bare minimum hurdle that I think any investment needs to cross, right, to be past the risk-free rate of return. And we've also seen this in previous high inflation cycles. Right, the last one that we've had wasn't until many decades before. So the wine data is not as robust as it is now, but we've seen that it's been relatively untouched, just because in sort of high interest rate and also combined with higher inflation level environments, wine being at the end of the day a commodity is always going to outpace that inflation, given that it is a lot of people, a lot of machinery, a lot of gas that comes into actually producing the wine, from a physical level, from grape to bottle.
Sort of similarly, how has wine performed historically in a recession, so such as the one at the onset of COVID-19?
Yeah, so in onset of COVID-19, I believe stock markets dipped a little bit over 20% in a very short span of time. Wine was completely untouched. It's something that didn't even dip 1% during that time. So very, very resilient. I think we were all drinking more wine during COVID as well. So that also helped, right? The online retail obviously enjoyed a boom as well. And also, looking back to a larger recession, right? The Great Recession of 2008, 2009, while most equities plunged, almost more than 50% over that multi-year span, wine only had a single-digit dip. So, there's nothing that is 100% recession-proof, but wine has proven to be quite resilient in those times because, it's really just consumption that is the main factor that leads to wine prices going up and down. And usually during recessionary environments, alcohol consumption is slightly elevated than normal years as well.
You did touch on this a little bit, but how liquid is wine as an asset?
So I would say compared to equities or other, like crypto, very, very much so less liquid. So I would put this more into the camp of a long-term asset, like a bond or real estate, right? You really need to have a multi-year outlook for this asset class to really work well, because when we're looking to sell the wine, it's really going to be closer to its maturity period when people are ready to drink it. So if you're looking to sell earlier, there are going to be less potential buyers because most people are waiting for that wine to be mature, right? So to put that into examples, say you're planning on holding a wine to maturity 15 years later, right? So we know that a lot of people will want this 15-year-old wine. If you want to sell it at year 10, people would rather just buy already an older wine, one that's already at 15 years old to start with. So there's going to be less demand for wine that is younger if you're looking to exit it. So that's why it's really important to be able to align the expected exit windows of our clients with the expected maturity windows of the wine. And in that way, it's similar to a bond ladder, right? If you want to ladder it up and have different sort of exit windows for different bond yields, you can also do something similar in the wine world where you're picking wines from different years that are expected to reach maturity along an X amount of years timeline. And that can help investors be able to still have realized returns while investing into a long-term asset class.
So, yeah, a question kind of about the wine more specifically. How does investment grade wine differ from alternatives?
So I would say what separates investment quality wine from just regular everyday drinking wine, three main factors. So the first one is going to be the ageability. Most wine produced in the world is really not meant to be aged for 10, 15, 20 years. Right? Most of the stuff is made to be consumed within a pretty short period of time. I'd say less than 5 years. And that is going to be, I'd say, 80, 90% of all the wine, right? The stuff that is in the grocery stores, most people pick it up, they have it for dinner the following week. So investment quality wine is produced, meant to age for a very, very long time, which also gives it a long runway to be able to appreciate in value. The second one is going to be scarcity. So a lot of investment quality wine is made in very, very small quantities because they want to keep the quality high, right? They know that maybe there's 2 times, 3 times the demand for their wines, but they're not sacrificing the quality of their wine to be able to up their production. And the final one is going to be brand equity. So these are wines that people know and love and recognize, right? It's not just a Cabernet, it's a Opus One Cabernet, right? And that brand, similar in a lot of other luxury goods spaces, commands value, right? Why do people want to pay more for Chanel versus Gucci versus Louis Vuitton, right? They're all same raw materials, same similar craftsmanship and attention to detail, but some are just going to command higher prices than others just because of the branding.